Hello, everyone. Welcome back to another weekly edition of That's Our Two Satoshis Live. I think I was a little antsy this week, pushed the button a minute early, so sorry if some of you missed the introduction here. But for those who are brand new and joining us for the first time, we've been talking and writing about the digital assets market at Arca for almost 6 years now. We write a weekly blog. You can find it on our website, ar.ca/blog, about things happening in the market, and then we come and talk about it. And often I am joined by a guest. And this week, you probably know him more than you know me, joined by Sasha Fleyshman, Arca portfolio manager. Been working with me now, I think, was it 6 years running? It's a long time, pal.
Yeah, 5 years too long.
Yeah. Well, here's to another six. Sasha, as you probably know, one of the foremost experts, in my opinion, on gaming and NFTs, as well as the overall digital asset market. And lately we've been kind of picking different themes to talk about. I think the overall market a little disjointed, I would say, relative to previous bull markets. Previous bull markets tend to have pretty defined themes, pretty defined kind of rallies and idiosyncratic news here and there. This one, really since 9 months ago has kind of really been led by Bitcoin and still to some extent really being driven by Bitcoin, especially with the inflows in the ETF. We're getting pockets of new information and themes and things here and there. And one of the ones that we haven't been talking a lot about has been NFTs. Many have left it for dead. I think that's obviously incorrect, and I think Sasha does as well. And I had the chance to kind of just sit down, maybe because of a lack of other ideas to write about this week, but I had the chance to just sit down and talk about the NFT market and kind of where we are, where we're headed with Sasha, and definitely wanted our viewers and investors to kind of hear what he had to say about this. So welcome, Sasha, first and foremost.
Pleasure.
So what's your just visceral reaction to NFTs are dead? Like what does that trigger when you hear that?
Just not much, really. I mean, I've been hearing it since we started this, since we started looking at NFTs in late 2019, since I started participating in 2020. I first heard that they were useless, then I heard that they were unsustainable, then I heard that they were scams, and now that they're dead. I've heard that Bitcoin's dead maybe 1,000 times in my career here, and typically when people that don't participate in the space call something dead, I tend to swim upstream. So not too worried about it. They do have some fair points. There's certainly a lot of data in terms of attrition in the space, but I think it's misguided if you don't understand the context.
Sure. Well, let's dive a little deeper there. I mean, like there's subjectively there's a lot going on. Objectively, prices have had a pretty rough stretch over the last 12 to 24 months, right? So where does that sort of subjective and objective meet? Like, what data points are you looking at that suggests that price is not indicative of sort of the growth and interest in NFTs? Maybe sort of like a higher level macro view of what you're seeing right now.
Yeah. So in terms of price action, anyone that's participating financially in the NFT sector is likely not too thrilled with the last 12 to 18 months. Up until very recently, there was enough of a cover in terms of, the market was soft. These are seen as down the risk curve assets in a risk off environment. Sell-offs are known. Now that, the market's turning around, there's activity, there's certainly on-chain activity. And especially in super risk on asset types, the fact that NFTs are still kind of lagging to even outright just continuing to atrophy, that's causing a lot of frustration in the market. Everyone continues to look at this sector as like a paragon of like the upper echelon of wealth on chain. You've seen assets flow to CryptoPunks, Videnzas, autoglyphs as people kind of advance a tier in the space. And right now, you're not seeing that happen, and it's largely two factors. One, you have the rise of meme coins, basically stripping out all of the roadmaps and initiatives and partnerships and just creating a vehicle that allows you to trade on consensus and like social economics. And in that sense, I think that the meme coin phase as of right now is kind of taking away from NFTs. And then on the second hand, you have NFTs haven't really done much, right? We've certainly proved the concept in terms of rails and how they flow and how they store data. From a proof of concept standpoint, I think 2021 was very valuable, and I think that's why this space isn't going away anytime soon. But the crude answer is, if you look at if anyone watching owns NFTs, if you look at your NFTs and you ask like what have they done, it's typically not a long laundry list of items. And we forget sometimes that a lot of these were created at 0.03 to 0.09 ETH mint prices, which was like 50 to a few $100, and we as a market took it much higher, and then kind of reset our valuation framework and decided that that is the floor. And as they come crashing back down to earth, there's certainly a lot of distaste for the market. And I was a little bit too young at the time, but I think the dot-com bubble kind of felt rather similar.
Well, when you say you look at some of these collections, they haven't done anything. Do you think it's because there was never a plan to do anything, or do you think the plans have failed? They just haven't been able to successfully pull off what they thought.
I think the first few that launched did so under fair launch mechanics, right? CryptoPunks, when they came out, were a free mint. As long as you knew how to interact with the code base, you could mint a punk. It didn't cost anything. There was no sale for assets in on balance sheet. It was just a project that people put out. As the space really started to heat up, you started to see paid mints, and now with a paid mint, people expect some sort of continuation. It's not just a one-time creation of an asset. They expect community outreach. They expect conference meetups. They expect game nights and trivia, and all these little intangibles that create like a community around the asset. And so once you start to put money into the mix and there's a team behind it that now warehouses that money, then comes expectations. And so I think the market just shifted in terms of the appetite for these type of assets, which created a like delayed flow of sell side creation of these assets, and just no follow through because it wasn't really thought out at the moment.
Are you aware of a lot of teams that are starting to take that seriously though, and are trying to pivot, maybe hiring some business development people, maybe thinking of it as more of like a real company and using some of the resources they have to build out some of those functions?
Absolutely. There's I would say it's much more heavily weighted to the former. But those that are actually trying to do something and create either IP value or pass through value to an ecosystem, whether it's a metaverse or a game or any sort of compounding value on the asset, they are out there. First of all, building product takes time. It's why venture capital exists in the first place, right? So this has completely usurped the normal pathways of like capital formation and like product development, and you're kind of in the kitchen with the chef the entire time. And I don't think most people were expecting that, and many are not set out to do so. So there are projects out there. I'd say they're in the minority, and they are building product. It's just going to take time. And in the meantime, with the sentiment overbearing, generally they all just get washed up in the rubble.
Yeah, I'm gonna put you on the spot for a minute, and if you don't have an answer off the tip of your tongue and want to wait a little later, that's fine. But like, pick a project that you thought had some promise, or at least had some early buzz or some community, and that's doing nothing. And like, what do you think they should be doing? Like, what do you think? Like, is there anything any project you can think of, any NFT collection you can think of, where there's an obvious solution in your mind of how to re-engage and grow from here?
Yeah, so I could go the easy route. I am wearing an Artifact hoodie, which is a Left 4 Dead collection that got aqua burned. But instead, I'll go with one that I actually still very much so believe in, which is Azuki's. I think Azuki started off very promising. They were seen as Eastern ideology, PFP culture. They had a massive following. I think at one point got to 40 plus ETH per asset. They had a few large snafus in the middle. One, some old dirt on the founder came to fruition. Two, they essentially diluted the product by issuing 10,000 or maybe 20,000 new assets in the elementals that looked too similar to the main asset, and just lost the trust of the community. I think there's the easy answer and the hard answer of how to like reinvigorate your community. Everyone's pointing to the easy right now, which is launching a token or a meme coin or some sort of pass through value to kind of reset the equilibrium of value accrual. I think the harder option that they're already doing. They've been hell bent on building an anime through their studio, internally housed, using the IP of the collection, and in my opinion, they're thinking in years instead of months. In the terms of the only way that these collectibles and PFPs can retain value long term is if they have, horizontal like IP retention, and they start to get integrated elsewhere. We're seeing that in venture. I'm not exactly sure what it means yet, but IP as a service is a new moniker. IP has been the number one unlock that venture is trying to tackle right now, because everyone likes to pretend they have IP. Some people actually do have IP. You see it in gaming with UGC. You see it in product with branding, merchandise. Pudgy Penguins did a great job with their Walmart release. So it's certainly at the forefront of discussions across the table.
Yeah, you mentioned gaming, and I think you have certainly been one of the loudest and earliest proponents of the intersection with NFTs and gaming. What are some of the things you're looking at there? Are there certain projects, or is there a certain infrastructure, or certain KPIs that you're looking at that starts to put some real data behind your views on a bullish resurgence in both gaming and NFTs?
Yeah. So first, to start, the reason that I think gaming and Web3 gaming is a natural fit for digital assets, has to do with like history of gaming. This is not something new to the gaming industry. Turning assets in game into quantifiable equity value. NFTs, in our opinion, just offer a better method of transportation for those assets and ownership. And so the unlock hasn't fully happened yet. We've seen vestiges of it over the last few years. I think it was a bit of a cart before the horse problem. The mechanisms for transference and the underpinning technology was there, but the game itself and the product wasn't fully ready. So dropping a lackluster product with top of class infrastructure doesn't exactly bode well, because the end user only cares about the former. So in terms of what we're excited about right now, obviously we've been very active in the venture gaming space. Some of those have come and announced and are coming to market soon. Some of them are still in the shadows building. But first and foremost, this year is the year for gaming, in my opinion. I think there will be 30 plus games that are live operation, ready to play on Epic Game Store, on Steam, on console through Microsoft and Sony. I just think that this is a big year to kind of put up or shut up for the space that has been investing in Web3 gaming for almost 4 years, and has some, but not enough to show for it relative to the capital outlay. So very excited for just actual product coming to market and showing people what it means to play a game that's at the same level of virality, but with the addition of ownership of assets.
Yeah, you mentioned Sony, and one of the things that we've been talking about for a long time, and was whether or not Web 2 is going to successfully pivot into crypto and Web 3, or whether it's going to be organic, crypto native companies who kind of lead the Web 3 gaming and NFT world. In fact, you used some pretty strong words, a direct quote in our conversation. Facebook rebranded to Meta and flopped on its release because it didn't bother to ask anyone who actually participates professionally in this space what would and wouldn't work. Hubris from incumbent traditional companies will always leave them on the outskirts, which is potentially very bullish for crypto native companies that grow organically. Why? Like, it seems, in my opinion, hard to believe that the biggest, most well-resourced and largest community companies can't successfully get into this space.
Absolutely. I think it's a unique opportunity where you have an industry that is, we're over a decade old, but we're still brand new. We're nascent and we're growing. We have our own primitives, our own ideals, our own like core tenets of belief in crypto. Those have changed over the years, but they still are rather unique. And then you have the incumbents, which have all the purchasing power, and they can run M&A, they can do takeovers, they can try to carbon copy and just push it out with bigger marketing dollars. But at the end, what you cannot replicate and you cannot rectify is the community and culture of this space. You can pay all the dollars you want and market it to the world, but unfortunately, for Meta, the world doesn't care about the metaverse. Only those of us that participate in this space currently even really understand what they're trying to do. So if you're not going to appeal to the users and the demographic that has been in the space, call it 2 to 10 years, depending on who you are, like, you are going to, miss the forest for the trees. And they certainly put a ton of money into the project, and they certainly flopped because I could tell within 5 minutes of looking at it that it would never be palpable for the communities that would actually need to use it. And I think a lot of that just comes in with consulting fees and 7 orders of magnitude of different touch points before you get to the actual person that knows what they're doing. And it was an expensive endeavor for them. And I hope they learned their lesson, because I'm sure they'll be back, and I'm sure eventually they'll come out with a great product. But they do need to talk to people that actually spend the time in this space.
You're saying you haven't gotten a call from Facebook?
Yeah, it's kind of hurting my feelings.
What do we think about this meme coin rally in terms of, is it a perfect substitute for NFTs? Is it sucking up the, quote unquote, gambling like casino money that otherwise would be flying into NFTs? And if this persists and this is a new, bigger, more liquid way of expressing that view, what does that mean for the future of NFTs?
Yeah, I think it absolutely is detracting from NFT interest. You basically isolated the risk vehicle of the NFT and stripped away any semblance of front-facing art or IP or community. And the community is in of itself just being a part of the token economy. I'm not saying I'm correct on this. It's certainly a hard one to gauge. I personally think we're somewhere between the 8th and 9th inning of this type of move. It's getting very frothy. There are a few that will survive medium to long term. Things like Whiff, and at this point even Bowden, and there are communities that have already superseded any level of like short-term movement. But for the most part, like, this is just a casino with better than 49% odds, and people are willing to play that game. The amount of money spent, I think the metric came out last week, that the amount of money spent on lottery tickets is the highest it's ever been in history to start 2024. People are spending money on what you would consider a lottery ticket, and this is just that with a much higher return profile in a much shorter time frame with much better odds. And I think that cannot be lost. I was the miser on it for months, and then I tried it myself. I still don't exactly love it, but I can certainly understand from a gambler's mentality how to look at these things as a zero or retirement type of outlay.
Do you think there'll ultimately be like almost 2 separate markets? Meaning, like, I think the equity market does a pretty good job of compartmentalizing things like GameStop and AMC versus like an Apple or a Google. The crypto markets, for the most part, do a pretty good job of compartmentalizing, a Uniswap and a DYDX, or a Helium, or a kind of a project that's clearly more like a company that happens to be using crypto versus a Dogecoin or a Whiff or a bonk or something like that, right? So do you think that ultimately happens in NFTs? Like, are there going to be the NFTs that are just pure speculation and fun versus eventually tackling some real world issues, whether that be IP, like you said, in gaming, or something like healthcare records, or even, replacing coupons in a Sunday paper or something like that?
I certainly think there's going to be a barbell, right? It's going to be a barbell approach where some people want, all fun, no breaks, and that's going to be on the meme coin side, and some people are going to want, actual product that just has much better infrastructure layer attached to it, and that's going to be on like the actual NFT value proposition side. I think it's rather obvious right now with all of these alternative layer 1s launching, and layer 2s, and even some layer 3s, maybe layer 4s if I'm missing those. They're all attaching meme coins as like their community coin, and what that does is it gets these layers off of zero, right? To acquire your first 10,000, 100,000 users, use this community coin, you even give it away for free to all of the prospective users, the airdrop farmers, the actual product users. And all of a sudden you now have it's basically a sentiment gauge that has a financial value attached to it. So the same way that you look at Google searches as like, oh, I wonder how many people are worried about, the NBA finals. And you can type in the ad, and probably not many right now. It's not even the playoffs. But if you look at the meme coin price and transaction volume and user count, you can now directly gauge how many people are either excited about the layer one about to drop or are increasingly interested in the layer one as it's already live. So we're seeing every single project either incubate their own or sponsor an outside project to come in and be the community coin of the chain. And I think that's a very double-edged sword. I think it's valuable now. I think it could be very detrimental medium term. We're all operating in the same environment of this happens so fast. We're all learning as we go. I know some investment vehicles are even allocating to this. It's all over the place right now. And so we're all just trying to find any sort of solid footing on the ground to really understand what's going on.
Okay, let's bring it home on this, because I think we're running long on time here. One or two or three or anything. What's something that you're excited about right now? Either a project or a game or something that any viewers here should certainly look at, either from an investing standpoint, although this is not investment advice, or from a actual usability standpoint.
Yeah, I'm gonna just beat the same drum that we started the call with. I think if you are a traditional gamer or even interested in gaming, have gamed in the past, I think this space will be surprised very much so to the upside in terms of the growth in the games themselves and the actual efficacy of those games, the game loops, the product, the art, the matchmaking. Everything is an order of magnitude at the very least better than it was last cycle. It was advertised as great, it came out as poor. I think there's a delay in what we've been seeing and what the market is going to see in terms of where gaming has come and where it's going to go. And so, without directly shilling our own portfolio companies, I think to try any game. There's going to be a ton of games coming out in the next quarter or two. Try them all. There's enough for every single sector. We have RTSs, we have MOBAs, we have battle royales, trading card games, sports games. They're all over the place. And I would recommend tinkering. It's usually free and actually most of the time positive EV to play these games, or airdrops attached, play to earn mechanics. Just spend a few hours every week as a gamer trying things that you may not play long term and understanding where the value unlocks. And I think that'll be a wise decision as time goes on.
Great. Well, Sasha, thanks for the time, pal. That's it for this week, guys. We'll be back again next week, as always, with a different theme, maybe a different guest. But for now, if you want to reach out to Sasha and get to know a little bit more about him and his thoughts on the NFT market and the gaming market specifically, you can find him at Arca Chemist. And of course, you can reach out to anyone at Arca on our Twitter X account at Arca, or check out our blog if you want to read the entire conversation with Sasha at our website, ar.ca/blog. Thanks again, everyone. That's our 2 Satoshis for this week. We'll be back next week. Take care.